Dan's a fantastic man. He really is.
Ladies and gentlemen, please welcome.
What's going on, everybody? It's Dan French here again. I don't know what happened. We had a technical difficulty last time. Hopefully there's no echo this time. It doesn't sound like there is. And appreciate you guys tuning in. Sorry we had to restart this podcast. But again, we're going to talk today about financing real estate. We're going to talk with Matt Shield. We introduced him. I'm going to do it again. Matt, he's back. What's going on?
What's going on?
Shield Team 6?
Shield Team 6.
That's right, buddy. What's happening?
Get in, get out.
Yeah. So good, man. I appreciate it. It was weird when we got started.
Yeah,
you know, it's
no
kind
bother.
of
No bother.
yeah, kind of a weird thing. We also have Mr. Preston Abel.
Yep.
Preston Abel, and you work
Nailed
with LEV Group?
So Lev Restaurant Group. So,
Lev. Oh,
yes. No,
Lev.
it's all good.
Okay.
Yeah, so we have a lot of different varieties of restaurant in town. We
Gotcha.
have coffee beans, Jamba juices, high-end stuff. Salito Posto's the most recent one. We got Tiki Bar, Golden Tiki. We have
You got all the
pie.
good, yeah.
So we got everything, the whole gamut from La Strega. It's just, the list goes on. But we got quick serve. We have tourist destinations. We have high-end, local, neighborhood establishments. So
Excellent, man. Excellent. So
whole-
we're going to
the whole
talk a little
ride.
bit with you today about the commercial sector here, commercial real estate. Also, we're going to talk with Larry Perna. He's a home inspector. He's not just any home inspector. He's a master home inspector. He's one of what, 6? Is that right, Larry?
Yeah, there are about 6 here in Clark County, and you can just call me Master.
Master, like Master Miyagi, right?
That's right.
That's right. So we got a lot of good information today. We're going to talk about the commercial sector here with Preston. Also, Larry, we're going to talk to him about new homes and what to look for when you're going into a new home. Some of the things that you deal with. And I want to start with Matt because Matt, we always do a market update with real estate. We know that inventory is starting to open up. And I just want to kind of go over that with you because I think it's opening up a lot of doors now for first-time home buyers and people out there in general just looking to maybe see when that opportunity is there to buy a home. So what are you seeing out there, man?
So there's about 3,900 homes on the market right now.
Yeah.
That's gone up quite a bit over the past month and a half, 2 months.
Okay.
So you got more opportunity for buyers. Still encountering multiple offer situations.
Yeah.
A good-looking home is going to be very attractive to any buyer, and there's going to be more interest in it.
Yes, absolutely.
In terms of what I'm seeing a lot more homes coming on the market with tenants in place in the lower price points. For my FHA buyers, a lot of the time we're just writing offers and not even looking at the property. We just look at the photos and write an offer.
Yeah.
Partly because it's so hot outside, and also there's not a lot of point in spinning your wheels unless you have an offer accepted.
Right.
Inventory's creeping up. I don't think we're going to have a sudden flood of homes come on the market, but it's steadily going up. And, often in these hot months, June, July, August, a lot of people slow down because it's so hot. A lot of people just wait till it cools down a bit. Also, a lot of agents aren't working so much in the heat. Some agents are like out of town, so things slow down.
Weekends.
So things slow down, but it always picks up.
It always picks up
in the fall.
Yeah, and I think you look at last year. We were talking about it right now. So, what's contributed to this housing market, and what do you think things are going to head going into, let's say, the end of this year? Because we're already in the summer. We're getting close to it, right? So we're in the summer actually, but we're in the parts where people do they typically move at this time period? Like, as far as you're saying that in the summertime, do people really kind of retract because it's so hot?
People are moving whenever. Like, it's just a product of their life circumstances.
Sure.
But I would say that the market is like, I wouldn't say it's slowed down. Like, I'd say there's a bit more opportunity. It's hard to gauge whether it's less competitive.
Sure.
But on that vein, how I've been hearing a lot about everyone coming in with cash offers. Everybody, obviously,
Yeah,
from
there's a lot of
California.
cash.
Is it a lot of cash? Like, what is? You say it's very hard for new home buyers to get let's say you're a new home buyer. What would you have to go do that?
To be in an ideal
to even be competitive in this market.
So good question. So if you're short on cash, which means when I say short on cash, you've just got enough cash to get the deal done. Like you've just got your down payment, maybe 3.5% FHA, and you got like $5,000 in closing costs, then you're kind of in trouble, because like even if you've only got 5% down for like conventional, but if you've got like a spare 20-30 grand to get the deal done sitting on the side, then we can structure the offer so that we can get the deal done. But there's various techniques you can use to like bedazzle the seller and the agent just with that extra 20-30K by how you structure the offer. One technique that I've found a lot of success with is I write the offer saying that at close of escrow, we're going to give your seller 10K.
Okay.
Like for their closing costs.
Yeah.
And then no one else does that. And they're like, even the agents sometimes don't understand. They're like, what do you mean by you're going to give me 10K? And I'm like, yeah, we're going to give you 10K.
We want the deal.
Christmas came early. And then so it gets them to accept the offer.
Yeah.
And then what happens is usually I know the house isn't going to appraise. And so say the house is listed for 420, and it's going to appraise for like 400. Well, no. Okay, let me say the house is listed for 400, but like it's probably going to appraise for 390. But instead of offering them like 410 or 420, I say, hey, we're going to offer you 400, but I'm going to give you like 10 or 15 grand at close of escrow.
Yeah.
And then you start the contract, and if they move out, then you've kind of got them by the balls because they want to close the deal. And then when it doesn't appraise, you say, oh, good news, we're still going to close on the property, but my buyer's not going to give you that 10K now. We're going to put it towards the appraisal.
Yeah.
And sometimes they get butthurt, and you still have to give them a little bit of money. But at the end of the day, most sellers want to sell, and you just got to like smooth it through. You know?
I think a lot of
Does
people.
that make sense?
It does make sense. I think a lot of people want to sell, and I think you look at. I mean, we talked about it. Yeah, I mean, it's challenges, but I'm starting to see it open up, and we all know that if rates continue to go up or if they get higher, you go back to 2018, 19. I think we saw rates right around 5%. And what did that do? I think that's a healthy market. Everybody's like, well, I don't want rates to be 5%. Well, you can't have everything. You can't have small or lower interest rates. You can't, you got to have inventory on the market. And when you look at a healthy market, I always say it's, probably closer to like 9,000. We have what, 3,900 homes?
3,900. Yeah. So we got a ways to go.
We got a ways to go. And you guys have seen this. So what do you see out there as far as Preston? What do you see
to kind of back up, I guess, rewinding like kind of pandemic. I think that was the most interesting part about, going through a pandemic, figuring out what's going to happen. And a lot of people in my zone, so I specialize in restaurants, right?
You specialize in restaurants, right?
Yes. So I found my value in real estate was to try and find restaurant opportunities that were coming available versus just what's on the market, because anybody can look and see what's available. Yeah. But if you can find something that's, oh, hey, this restaurant looks like they're failing, there might be an opportunity. Let's talk to the landlord. They want out, it helps them, helps the landlord, brings in a new tenant, whatever. Everybody knew that the pandemic was going to like wipe out the bad business operators. And they went out quick. Literally like first week, they should have probably closed before the pandemic anyway. Sure. That was the nail in the coffin. It caught a couple good operators too, but everybody that was a strong operator, from my point of view, was poised, ready to pounce on whatever came available, because they saw that everyone's still going to need food after this.
Yeah, the location's a location.
Yeah.
Well, you just have to have the right product and management.
Yeah, with restaurants specifically, there's so much invested into the space.
Yeah, like
with
the kitchen,
sewer fees,
the food,
the hoods,
not food.
Yeah, the grease traps, everything like that. And when an operator can go in and just scoop up $150,000, $200,000 of improvements. It's huge to get off the ground and open up and get your best foot forward.
We got to see how valuable drive-throughs were too, right?
Those are, if anybody's listening right now, if you have a drive-through on the moon, I want to look at it, right? Because those are, and landlords are understanding how valuable they are. Yeah. But that kept a lot of businesses, a lot of operators, franchisees operating, because they were, that's all that people could do. So you still got to get the kids out of the house and go do something. You take them to a drive-through, and a lot of operators I know, their store numbers improved. A lot of pizza delivery people, Chinese, Asian foods that are built in like that.
Yeah.
They just flourished, and it was the quarantine was more of like an accelerator than anything on that.
Yeah.
So
Yeah, look how much more food we all personally started ordering in. And
yeah. So you still get it, right?
Yeah.
But the thing that happened is like there was the few operators that went out. They went out, but the other shoe didn't drop. Everybody was still waiting for more to come up, and it never really happened. So there was some government benefits that helped, the PPE loans that kept people afloat. If you're smart enough to go figure that out and go work through that government bureaucracy and red tape, you might get rewarded. A lot of people didn't get rewarded, and
It's
they
tough.
couldn't make it work. But
I went down to First Friday last night, and
You went down to First Friday.
Yeah, it was terrible. It was so freaking hot.
Yeah.
Like, I had to walk around, looked at the food trucks. I was like, I'm not going to eat food truck in like 105. And
stand
then,
outside, wait.
so then I went to a couple restaurants, thought about eating there, but it was just a shit show. And then I think that there's too many, like, I think something really bad for a restaurant is if you've got like a millennial that's greeting you or serving you that doesn't give a shit about service at all. And do you know what? Like, we went to two places, walked out, and then went to what's that Mexican that's been there forever?
Main
That's
Street.
one.
The main one
Yeah.
on the corner with the yellow building downtown.
Danya Maria, maybe.
That's it. We went there. That was amazing.
Yeah.
Yeah.
I think too, you got to go down there. That's never changed. Like, that, you got the First Friday, and it just seems like, maybe slow down. You know how they go down the streets
Yeah.
where it's like
It wasn't packed.
It wasn't packed, huh?
No, it was kind
Why?
of. It was kind of crappy.
Really?
But maybe I'm just so posh now.
Yeah.
I don't get with the hipsters.
You
No, I'm
think
joking.
with the hipsters.
I'm joking.
Well, you know,
I went 2
I'm not
months
that
ago.
posh.
I think it was their first one when they opened up. We
Yeah.
also ended up at Danya Maria.
Yeah, that place is good.
Yeah, so that's an old favorite of our families.
That's
Yeah.
solid.
yeah, it is a
Dan's about
solid.
to get a sponsorship.
But it was
here.
packed. Yeah, it wasn't too hot, but I wouldn't have dared going out last night.
Yeah, exactly.
That's
but anyway,
interesting.
I
I'm
went
sorry to
just-
hear about the service, but that is true. Throughout
Anywhere,
everybody right now.
anywhere. They're not used
be
to it.
patient with your service people out there. That's our
So-
industry out here, and it's very tight
So
right
I've
now for
worked.
everybody.
Here's the thing. I don't think there's any excuse because I've worked in restaurants, bars, nightclubs. Like, I've done all sorts. There's no excuse to not have your head on a swivel and make your clients, your
I totally
customers
agree with
happy.
that. I totally
There's
agree with
there's no excuse, and you can do it very easily
Yeah.
by just doing something slightly different. But people, it's just different now. People don't. And the other thing, do you know what sucks is, like, with the COVID, they don't even want to talk to you. They'll give you like something, and then they'll just leave it on your desk, like one of those QR codes, and then they'll fuck off.
Yeah.
And then you're like, oh wow, I feel really good coming here, you know. So
Thanks for all the explanations of the menu.
yeah,
and everything,
exactly.
yeah.
So it's just different now, but maybe I'm just becoming an old grumpy bastard.
Well, I think
a little bit of column A, a little bit of column B.
yeah.
That's everything.
I think the market is opening up where you got millennials. We'll talk about
Yeah.
we're going to talk about housing, but the millennials are starting to come into their own because they went through the processes with their families, right? When we had the whole problems back in the mid 2000s. So they're now in a position maybe to buy a house, and I think that's starting to be a bulk of buyers out there. And I think they're starting to come in the market. And I think those are the ones that are somewhat suffering a little bit because a lot of them might be first-time home buyers, and so there's not a lot of opportunity out there for that. But you look at the whole big picture of housing and where we're at today with the inventory. I see it continually going up, or
It's going to creep up.
Yeah, what do you guys think? Do you think it's going to keep going up, Preston?
I know it has to. So
Yeah.
for me, I look at in my world, it's more of a business decision than, this is a nice fireplace, so I can see my kids in the
Yeah.
backyard, or the pool, or
Right.
This is in the school district. You want to be in the right demographics. You want to be on the hard corner. You want to have all these attributes that should make a business successful. But it's very much a business. Repeat the question again. I can't get
It's all right. Basically, what I'm saying is like, do you think the
where the
inventory
prices will go up.
Well,
So-
not just the prices, but the problem is people don't have opportunity or options. Matt knows this because he's dealing with people on a daily basis about you. People go to new homes because there's just not a lot of homes, existing homes we're talking about. And I think it's pushing. It doesn't mean that you as a millennial or anybody out there that can't buy a house, but they're going new. And when you look at how many people are looking at new homes, you're 2 or 3 months on a waiting list now. So I think it's going to present a healthier market. I think we're really waiting for this. I think if you do this in contribution to hopefully rates do go up. I know everybody doesn't want to hear that, You know, we had the refinance boom, we had all these things going on, but we do need rates to go higher or tick a little bit higher to kind of level the
Rein it
playing
in.
field. That's
Rein
what
it
we're
in.
doing. We need to level the playing field. What do you think?
Yeah, and in my world, you know, it's all comes down to a function of like land and what you can really lease for. Industrial right now, which is not my expertise, but that is on fire is an understatement.
Yeah.
People are doing deals. I was just at an AAP breakfast, and they're talking about how people are doing deals that don't pencil, and it's like, how is this going to work? But they're preemptively doing these deals knowing that rents are going to have to drive up. You know, I just helped my auto shop guy find a new building for him, and he had to pay over market for it. So I felt like I was, you know, in your line of work where usually it's like either the space works for us or it doesn't.
Right.
And, you know, you can afford to pay what you need to make the space work. But yeah, it's landlords definitely know they got you by the short hairs, and will, you know, it's unfortunate some landlords will play that game, but that's the nature of the beast, and you deal with it. And I'm like, hey man, you want the space? He says he wants this much, so either you come to that number or you tell him what you can afford, and he mulls it over, and if he doesn't find a better offer, then it's yours maybe.
I see rates being one of the contributing factors of getting more inventory. I also see, like I said, the millennials coming in, and then I also see the moratorium, but I don't think the moratorium is actually going to create a lot of opportunity. What do you think, Larry?
Well, I see a lot of new houses being built. You know, we used to do 1 or 2 or 3 a month. Now we're doing 1 or 2 or 3 a day.
Wow.
So, and they're just going like gangbusters.
Yeah, and you do a lot of the inspecting on these homes, is that right?
Yeah, well, we do, you know, probably every day of the week we've got at least one new build going on. So we're one of the few firms that has the higher level insurance that they require. And they make you jump through some hoops, but once you jump through those hoops, they get to know you, and, you know, we deal with the same old people from all the big housing companies.
Yeah.
So question, Larry.
Yeah.
What are the odds that your inspection price comes in right at what the sale price is these days? How often does that happen?
You mean an appraisal?
Or yeah, I'm sorry.
So we don't do
Oh
appraisals.
shit!
Yeah.
I'm out of my league.
Yeah.
That's all right. That's all right. You know what? A lot of people think that appraisals and home inspections are the same.
Oh,
They're
we get-
completely
They're not.
different.
We get a lot of calls for appraisal appointments, and I'm like, "Are you sure you want me to do
Yeah.
an appraisal for you?" So,
I got somebody that wants to call in. You can, Harry, you can call in, man. There's no restrictions on calling in. Anybody has to call in for a question, we can do that, and I'll try to sync you in. You pretty much have everybody here, so if you want to call into that number, we'll definitely take care of you. So I think the big question and we're talking about is that I think most people are looking at this inventory being a problem, and Vegas, they're saying across the board that everybody, all these all these across the board, all the states are starting to open up where there's more inventory. It's been a problem across the country. But is Vegas going to see that? Because I think Vegas is a different animal altogether, and I think that's the question. Because I'm curious, it's going to help us all if that does open up. Because I think
Vegas is different because we got really different like population migration here to most states.
Right.
Like we got an exodus of people coming here, mostly from California, but from all over. And, you know, Vegas has got a certain weight as a city now.
Yeah.
And, you know, we got more influx than other states. So
100%.
if more homes are creeping onto the market, but they're getting taken up, you know. So I think we will hopefully buyers will have a bit more choice. Sellers are going to be in a good position for a while, and you know, we are a unique market. Like, you know, as an investment market for people buying for like rental investments, it's kind of crappy now.
Yeah.
Like, it's crappy in the sense that you can't get the yields. You're not going to be able to find like $50,000 house, $100,000 house anymore that you can rent out. Like, you got to go somewhere else. But like, you know, I think we're going to see more, you know, more people migrate. People are going to continue to migrate here, but also something else like Blackstone, the hedge fund last week, I think they spent like $2 billion buying like Vidara and it was City Center, and they, you know, they're betting that, like, they're betting on the rents for the casinos, and, you know, they're bullish. And, you know, Blackstone, they're pretty evil bunch with a lot of money, but
They
they're
are an evil bunch.
They're smart. So
Yeah.
the smart money's
They
still
return
piling
money
in.
to their investors.
Yeah, the
yes.
smart money's still coming in. So that's an indication for you.
We're still opening
No.
casinos, right?
Yeah, I said I went to Resort Worlds.
We got
Yeah.
a call coming in. So I think
Ooh.
this is
It's your mum.
yeah,
It's
right.
an extended warranty.
Yeah,
It's your
always.
last opportunity.
This is the French Workbench podcast phone number. Or is this Harry? Hello. Can you hear me? Oh,
Yes, I can.
okay, there you are. What's going on, Harry? How are you?
Good. How you guys doing?
Good, man. Thanks for calling in. What's your question, man? We'd love to help you and answer your question.
It's kind of like a long question, but I'll try to explain it as in less time as possible. So I am 32 years old,
Okay.
looking to buy a house.
Okay.
I do not have a perfect credit, like around 650-ish. My income is good. I'm a self-employed guy. I'm into trucking business. Do not have any liabilities whatsoever. Everything I have, as for equipment, my cars, everything is paid for. And just want to ask you, what would you guys recommend to go jump into a house right now or wait it out? The chances of approval, and the last part is I do have some money saved up. I'm right around like 120,000.
Yeah.
What would you guys recommend on it?
Matt, go ahead, man.
Okay, so what was your name again?
Harry,
Harry. Hi, Harry. Nice to meet you, Matt Shield.
same here.
So do you live in Las Vegas?
I do, yes.
Okay, cool. So, Harry, you're in a good position. I would say that, I mean, over like a 5-year period, you can't go wrong because, I mean, as you live here, you know that, the valley is filling up and they're not building any more land. And, population is becoming more densely populated, which is why you see like a lot of apartment complexes, and in the newer homes, they have like much smaller lots because the land is valuable and the builders are trying to make as much money as they can off of each lot.
Yeah.
So you're not in a bad position, Harry. And so I would say that if you can find somewhere that you love, like figure out a list of like what you want out of a home and what's going to make you happy. And, if you hop onto the ladder by getting your first property, then there's no danger that as we, gradually increase, I mean, we've seen at least a 10% increase in value so far this year in many zip codes. So if you can lock in that rate and get that, like 30-year mortgage and, you've got plenty of cash to get it done. If you've got like 100K, depending on what plans you have for your business and how comfortable you feel with like your liquidity and having a cash reserve, then you could be in a position where you could put like, if you were to put like 20% down on a property, then you wouldn't have mortgage insurance as well, and your monthly payment would be less. But we lost him.
No,
Oh,
we got
okay.
actually another
So-
call.
Yeah, I'm listening.
So
I got another
Harry,
call coming in.
so-
It's okay. We'll take
So
this call.
Harry, what I was going to say is, I mean, you've got a lot of options, and if I was in your position, are you renting somewhere right now, Harry?
Yes, I am. I live in Henderson right now.
Yeah. How much a month are you paying in rent?
It's actually not that much because I just moved in over here right before the pandemic started.
Okay.
I'm renting out a 3-bedroom townhouse near Pecos and 215. So I believe I'm paying around $1,450 for that.
Yeah, that's cool.
Seems
That's
like a good deal.
Yeah, that is a good
Keep
deal,
it.
Harry. That's a good deal.
It's a pretty good deal,
But
yeah.
at the same time, if you could easily get a nice pad, and maybe depending on how nice you wanted it and how much money you put down, maybe your payment might be a little bit more than $1,400. But like statistically, if you buy a house as opposed to renting a house, you're probably going to get like an extra 600, 700 square foot of home for the same price. And it's going to be much nicer as well because, it's worth like decorating it a bit and like manifesting your own space, whatever that may be, whether you like Elvis wallpaper or like something contemporary and modern or whatever, you know.
You
like,
got Elvis. You got Elvis wallpaper.
No, my auntie does. She's Elvis freak. Yeah,
That's
we
funny.
don't talk about my auntie.
Right.
So anyway, you're in a good spot.
Sorry, go ahead.
You're in a good spot, Harry.
Right, but my main question comes down to it, like, I do have cash saved up, and I said I do make good amount of money every month. So the payment would not be a bigger issue. For me, the bigger issue is, I've talked to a couple of lenders before this. Without running my credit, I've told them the same situation as I told you. And everybody has recommended me to at least get like 20% down. And being the credit is not that perfect.
Well, I think Harry, I think it depends on how much of a home you're buying. If you're talking about a conventional loan, the reason they're telling you that is because if you have a 650 score, you're not going to get good on a good interest rate, and you're also going to get a higher mortgage insurance cost. So
Right, the PMI.
yeah, and I think it's traditionally, if you have a 650 score, I would probably push you going to FHA, but then you're capped out at 362, 250. I think that's the base loan amount. So buying a home in this market, you have to pick your battles. If you're going to put 20% down, the real reason for that is because of the score, because they know that your payment's going to be significantly higher. Personally, for me, and I'll tell you the truth, I'm not a big believer in putting a bunch of money into a house. You can't pull the money out. Cash is king to me, but that's just my opinion.
So I got another point, Harry, is that the other thing is that you've got some liquid funds sat on the sideline, right? Mm-hmm. With like maybe 2 months of effort and some guidance from Dan, you should be able to bump your credit score up over 700.
Yeah,
right? There's no reason why that, if you've got some liquid funds.
Yeah,
that's a Dan question.
Here's the thing, Harry. Sometimes it's time, and sometimes there's a quick fix, right? And you get a quick fix if you have a revolving credit card, and you're living on those cards, and your loan to value on those cards is exceeding 25% loan to value. So banks don't like to see that, so they're judging you on your credit score very harshly with that, and so that's a quick fix.
Right, but the thing is, as of right now, with the score being this, it was actually lower than this. So right now, I'm not using any credit card more than like 4 or 5%. And as I told you, like everything on my record is paid off. I own about 2 cars. I paid them off last year.
Sure.
For my trucking, I had equipment. I paid that off last year, and that was the only time I was able to save like about 100. I mean, 100,000 is separate just for the house.
Yeah.
But I have saved up close to like 150.
Yeah.
From the past year till now, since the trucking's been pretty good, and that's what the thing is. I mean, for me, the biggest hindrance is the score not being over there. Like, and every time we go look at a house, and again, looking at the housing market, at nothing below like 450 or 500 suits the demands and the needs what we're looking for.
Right. I think.
Then again, I do not want to be out of cash either, like for the whole 100,000. I mean, if anything lesser than that, you know.
Well, here's the thing: is like I recently helped someone, Harry, that had their own business. They actually had a scooter rental business, and they did all right out of it. And they only put 5% down. They did conventional for like 500K, but I think the credit has to be good to do that, right?
Well, let's talk about that. So, have you had some blemishes on your credit?
I do have just one.
Okay. So a lot of times you have to replace bad credit with good credit. If you don't have a few trade lines on your credit that are in positive standing and that, let's say you've been paying on them for a period of time, then it's about reestablishing, or it's just time. And I think that's what you're looking at, because if you have only one thing bad on your credit, and let's say you have multiple trade lines in good standing, you should have a decent score. But a lot of times when you have one thing go wrong, let's say you have an 800 credit score or 750, you have a late on your credit, that's going to hurt you worse than somebody that's got 4 or 5 different accounts that have been late, because now you have that one blemish on your credit. So it drops your score quite a bit.
Hard to earn, easy to lose.
Yeah, and it's right. And so I think that's kind of a situation to look at. Now, when you look at your credit overall and you want to say, well, how do I increase it? Sometimes you can, like Matt was saying, you could take money and you can maybe delete some accounts or do something with it. But in a lot of cases, money doesn't fix it, because let's say you just have something on your credit that there's no way to just take it away, you know, or the only thing you can do on a quick fix, like I said, is like a revolving account or something that you can just pay off. But if you also too, if you paid off a couple accounts, let's say your car payment or something like that, you had a history of trade lines of time that you've paid on those payments. So that's actually helped your score when you pay it off in a very short window, just like a home. It doesn't help your score. It actually can drop your score.
Yeah. Maybe
One other
opening an
thing-
account sometimes helps, right?
One other thing, Harry, is that it's always good. Like having peace of mind is good. And like right now you're renting, sounds like a good deal. You got a bit of money, business is good. You're thinking about buying a house, but you got to give yourself your own sanity. So when does your lease expire on where you're living?
Well, it's a month to month.
Okay.
Initially we signed up for a 1-year lease, so after that we just talked over the phone and they said like you can live for like.
So that
as
you're in
long
a
as you want.
you're in a perfect position, Harry, to get it sorted out. One thing I would recommend is to like, I know you don't want to get your credit run for an approval, right? But it's really worth it if you've got a bona fide snapshot of exactly where you're at, and then Dan can give you a plan that will bring your credit up maybe like 50 or 100 points, because he looks at credit reports all the time. And then that way, if you do that and you're able to increase your credit, then you know you could buy a house with like you could buy a house with like 5 or 10% down instead of 20%. And because you got a bit of extra cash, I could get you whatever house you want, even if there's like other cash bids on the house. Like you're in a really strong position, but you've got to decide, like, are you going to fix your credit and wait and come up with a plan and put less down? Or are you going to go ahead and do something now, but you're probably going to need more cash to get it done because you've got a slight credit challenge. But you could, if you wanted, you could buy a house this week if you wanted with 650, right?
Yeah, like again, I'm going to say this. Matt's right. Harry, the thing is that when you have a 650 score, though, sometimes you don't, in some cases, you won't get mortgage insurance. They'll still probably price it out, but in some cases, you won't have mortgage insurance on a conventional loan. And that's what we're talking about. The conventional loan versus FHA goes significantly higher on your county limit of what that loan amount would be. So what does that open up for you? It opens up a higher purchase price of a home. They're saying this because of all these factors we just said. So again, it's going to come down to two things. We know that rents and mortgages or rates, and if you look at what mortgages are doing right now, the separation is a lot less than it was. We know rents are at 15-year highs. So you have to look and say, well, is it a timing for me? Is it the timing right for me to go in and buy a house at this time? Because everybody's different, you know. It might make sense on the outside, but everybody's different. So if it's good for you, we can figure out a way to get it done. You just, again, we're going to have to go down that road of let's look at your credit. Let's see where things are at. Is there a quick fix? If you don't want to go this route, going FHA, because FHA is more forgiving when it comes to compensating factors like credit score. They're going to give you a better rate. You're not going to, the mortgage insurance on it, if you put less than 20% down, is a lot less. And it's also a set amount of insurance that you would pay or a set percentage. So there's a lot of other factors that come into this, but you know, that's one of those things where you sit down and you just look at all the options and you say, what makes sense? I mean, I think it makes sense to buy, but you got to think that way too, you know?
Or
Definitely.
Or Harry, you could have a couple kids and then all the decisions are made for you.
Yeah, right.
Then you've got to buy a house.
I'm okay for now.
Then you'd be saying goodbye to some of your 150K.
Right.
Right.
You know what's funny about that too is a lot of times the wife or the spouse drives
Of course.
the purchase of the home
You
because
need a
they're
nest.
like, hey, yes, you need a nest and it's time and you know
It's tricky.
Everybody's getting being pushed to do it.
Be cautious, Harry. Be very cautious of that.
Right. No, I will be. But the only thing which bothers me is the most, like, as you guys said, I'm in a good position with the saved up amount and all that, but it's like just sitting in the bank like a paperweight.
Yeah, but it also
cannot
with
do anything
inflation,
with it.
Harry, like
Right,
cash is
right.
going up. If you put some of your cash and get a really low rate on a mortgage, then it's just a financial formula and you still got cash to play with, but you've got a chance to like get equity and come up, and then maybe in like a couple years time, 3 years time after you buy a house, you might have a clear idea of exactly what you want, where you want to be, or maybe you need
Sure.
more, but at least you'll be on the ladder, and you should have some equity, and you'll still have if rates go up, you'll still have locked in a lower rate.
Yeah, I think.
Right, that's definitely right.
Yeah, I just want to kind of piggyback off what he said. So for me too, and it's like this: you have to take a chance on anything in life. I always say it's time. You know, people start businesses, whatever. But I'd rather take a chance on paying myself forward by buying a house than just saying I'm going to keep renting. I mean, that's
money's
just
cheap now, right? It's never been cheaper, really.
it's cheap, and I think it's about position in life. Like he doesn't have to because he's. Are you single, Harry?
No, I'm married. I just got married.
You're married. Okay, so I mean, I don't know.
Well, Harry, what does your wife want to do?
Put the boss on the phone.
Right.
No, I'm
Me,
joking.
I love my rented life, but my wife is pressuring to buy a
There
house.
you go. I told you. What I say.
Put the boss
Happy
on the
wife.
phone.
I hit that one out of
Happy
the park.
life. Yeah,
But
but
you
you're
know-
in a good spot, Harry, and I'm glad your business is doing well.
Right, thank you for that. But yeah, especially that's why we made a move. I used to live in California,
Yeah.
and I was paying $2,600 for a rental over there. And when we moved out here, that was one of the biggest things, like to save up money
Yeah.
as much as we could and try to buy a house. And all of a sudden, I see my credit came down. And I've been trying the longest to fix it. But yeah, if we guys can, after you guys are done with your podcast, if we can
Yeah.
work a deal out, I'm all hands on the deck with it.
Yeah. What I'd like you to do is, I'll probably, you can take my information down now if you want, but I don't usually throw my number out, but I'm going to do it right now. You can call me on my cell phone at 702-332-3532. Maybe I said that too fast. I'll say it again. 702.
No, I got it.
Okay, you got it.
702-332-35.
Here's what I want to say about this, Harry. Everybody's going to be biased to buying a home. And look, we're in the industry all the time, and we see that it makes sense. But again, you gotta put your feelers out too, and it has to make sense to you. Obviously, your wife, it makes sense, but the timing's got to be right for you. And I don't want to push you into doing this unless people got to be 100% committed. And I think that's what I'm trying to say. Sometimes it's just not there, but if you're ready,
I mean,
Definitely.
right now, Harry, I think you've got a very smart mindset as to how you're approaching this. And a way I would approach it is have a chat with Dan, see what the real challenges are, and see if your credit can be boosted.
right?
With some
Right,
actions.
right.
And that may be able to happen in a month or two. Or Dan may suggest that you start one or two other credit lines just to put some upward movement in your credit score, which may help. But then what I would suggest is to look at your situation, figure out what a max approval is for now.
Yeah.
Like, what's the max approval if you wanted to go bells and whistles and make your wife really happy, right? Then get a max approval now.
That's never gonna happen.
Okay, well listen, Harry, we can keep this conversation classified, don't worry, okay? And so anyway, what I'm saying is get a max approval now and then have a chat with Dan and say, well, what would a max approval look like with like really good credit,
Yeah.
and can we do it?
Yeah.
And then
Sure.
when we do that, then we can show you what homes you can get now, and then you can decide if you want to show them to your wife, and then you can have like a real idea about how am I going to move my family forward and what's the best idea to do it. And then you can have a bit of peace of mind, because it's nice having like, cheap living expenses, and it sounds like you got an awesome deal for that location. It's just round the corner from my office. I know that area very well. So that's a good deal for that area in Henderson.
Gotcha.
But at the same time, if you're on the ladder and then, you can make the house a bit nicer, your wife will be happier. And then that over a 5 to 10 year period, the way they're building homes and the amount of people that are moving here, like Vegas is becoming more like California now. It's not like it yet, but it's gonna
Yeah, it's coming.
for pricing.
It's coming.
The influx is a lot
Yeah.
more. than before.
Yeah. Harry, I'll run a credit simulator as well. So we'll talk after the show. I'll reach out to you,
Yeah,
or you can
nice
reach
to
out
meet
to
you,
me.
Harry.
Actually, what you could do, Harry, is text me at that number, and that way I have your information, and I'll give you a call.
perfect. Sounds
All right.
good.
All right, Harry. Nice to meet
Alrighty,
you.
guys.
Nice to
Thank
meet
you
you,
so much
Harry.
for your suggestion, guys.
No
Thank you.
worries.
Absolutely. Thanks for the call.
Good question. Thank you.
That was good.
Yeah.
That was really good. So we also had another question come up here. I'm going to talk about that. So kind of like to sum up what's going on with real estate. I want to kind of go back to your situation. So we talked with Harry. He obviously is on the fence, maybe a little bit on buying, but it seemed like he's pushing more to buy a home. What
I
do
think
you?
his wife's pushing more to buy.
Yeah, it's his wife, right? So
Who
I
knows?
mean, kind of sum up what's going on in the housing market right now with real estate. You know,
Yeah, I mean, it's just very busy.
Yeah.
There hasn't really been any change. There's just more opportunity now.
more homes a little bit.
more
You're starting to
homes to
see them come
sell.
out.
Yeah.
And that's good.
Yeah.
We needed that. So I see real estate opening up a lot, and hopefully we'll start to see a little bit more of a healthier market. And I really look, I know refinances are there, but I think a lot of people have taken advantage of those refinances. They're still there. People are still doing cash out, but I still encourage rates to creep up a little bit because I think that's going to support that. So let's go over. I want to talk to you real quick because I did bring you on, and I wanted to bring you on to talk about what you do with the commercial real estate side of things. So Preston, you do commercial real estate for restaurants, is that right?
Specifically, yes.
Specifically.
I've
So
worked in different
kind of
areas,
take me down the
mostly
mindset of what you go through on actually, because you buy these restaurants in bulk. I mean, like, is it like multiple restaurants? Like, what is it?
It's all over the place. So
Is
like
it?
I said, we have such a I kind of, so my background's retail specifically. Decided to drill into restaurants because it's a great town for restaurants. Everybody.
Sure.
There's how many restaurants in town? 20,000 restaurants?
A billion. I have no idea. Everybody thinks that
There's a lot.
Everybody thinks that if they're a chef and they want to open a restaurant, but it takes usually a little bit more than that.
Right.
Or somebody thinks that they know a chef and then they're just going to give them money and then it's going to work, and that doesn't usually work.
So
either,
there's also in Vegas, which I think is pretty cool. You have people that are pastry chefs or chefs on the strip, and then they decide, I'm going to do my own restaurant.
Yeah,
and
and
that happens a lot.
Yeah.
And some of them are really good.
Some
are
of them are
fantastic.
awesome.
Some of them are like really good.
Yeah, a little hole in the wall. You
It's-
find
Yeah.
it.
it's great when they can just drill down to like a specific thing that they're really good at, like whether
Sure.
it's just an oyster bar or whether
Yeah.
it's like just baked goods or something like
We
that.
kind
then
of
they can
spoil
really-
in Vegas, aren't we,
Oh,
for
it's-
food?
Yeah, you
I-
go to
I
another
think so.
town. And
Yeah. I think so.
almost
I do.
nothing.
And I think a lot of people, when they come here, they can. That's one of the things about living here, right? It's like you can really have everything at your fingertips.
Oh,
right?
yeah.
My
There's
sister
nothing
was
that-
just here. She's like, there are so many stores and strip malls and restaurants.
Yeah.
Dude,
She goes,
it's a lot.
how do you just choose?
Right.
And every time she'd leave the house and come back, she'd have the same comment.
Yeah.
It's it's almost like
It's
have
like
it.
blown away.
Yeah. It's just I
We
think
get used to it.
yeah 100.
We're just like blasé.
Yeah.
We're like, oh, look, there's another $2 billion dollar.
But then you go
resort.
to Utah, you go to Cedar City, and you're like, how many choices do you have?
We'll go
Half
to
the
a
places are
liquor
not
store
opening.
in Cedar City.
24 hours.
You
People
do
forget.
not. You
People
miss
forget.
you miss Lee's Liquor when you go to Cedar City because in Utah the liquor stores are owned by the state of Utah.
Run by
Yeah.
the state.
You know, they're run by the Mormon mafia.
The wet towel. The wet towel society.
Pennsylvania, same thing. I grew up in Pennsylvania.
Not that I drink
State
anymore.
stores. Right.
So they're run by the Mormon mafia, huh? I
I
never heard of
mean,
that.
I
one.
just made that up.
It's state
wanna
regulated
take-
though.
Is it?
Yeah, they want their 10%.
Yeah.
Like even
Yeah.
the beer there is lower alcohol
Watered down.
level.
Yeah.
Well, I think too. I mean, it's crazy because it's almost like having you ever have like where it's like you got all the movie channel, not the channels, but the different platforms that they offer.
Yeah.
It's like you go on there and you're looking around and you're like, man, there's just too many movies to choose from. You can't really. It's like you just keep scrolling.
Yeah.
Like if you're on Amazon Prime
Well,
or.
I mean, are we talking about restaurants still?
Well, I'm talking about just restaurants, but I'm talking about Vegas in general, where it's I'm kind of referencing to the fact that like if you have a platform where it's like movies and things like that,
Yeah.
there's so many to choose from. You almost like kind of
I
outchoose
don't
yourself.
know.
It's like, you don't choose
You gotta
anything.
make an effort. Like
Yeah.
I've got into going down to Chinatown,
Yeah.
and there's good stuff in Chinatown.
Absolutely.
And it beats going to like the Cheesecake Factory or like I mean.
So do you try weird stuff down there? Like there's, I mean,
Do you want me to get into all my weird
yes,
stuff?
I want to know. Because let me tell you something. I went like you go up to this. There's like an upstairs restaurant, and it's like a restaurant that's like sells like squid.
Yeah.
And it's like these little rings, And I was like, man, what is it? It's so good.
I'm not that sophisticated.
No.
But when I first went down there, you want to look for crowds of Asian people
That's right.
waiting to go to the place.
That's right.
And then that way, you follow them, and then you get the good. But you need to make sure you understand the menu.
That's right.
You know? But
Yeah.
no, there's some good stuff. One good one down there. Have you heard of the Tofu Hut?
The tofu hut?
Oh,
yeah. It's like unlimited, all you can eat tofu, it's called the Tofu Hut, but it's like
A
Korean
ramen.
barbecue.
Yeah.
Where they cook the meats.
Yeah.
And you can't I haven't eaten there for a while because I've been losing weight.
Do they cook that like right in front of you? Yeah. You like
No,
when
you
go,
cook it yourself.
Right. You just throw it all
Yeah,
together
yeah,
and they just
yeah.
kind of, do they chop it up or
Oh,
something?
your table has a little grill built in, like into the center of it.
Yeah,
Oh, I see.
it's really good. Now, we mentioned earlier when we went on radio, I went to Resort World last night to check it out.
Oh,
And,
okay.
Yeah, and they have an amazing food court there. I had already eaten, and I didn't eat.
Yeah.
But the food court is amazing, and there's like all these different types of street food, but it's really nice. It's
all like Michelin
It's
stars.
super clean, Michelin star. It's not like you're eating it out of a roach coach like street food. It's really good.
Yes.
And then also you got like
Wait, what's a roach coach? What is that?
one of those food trucks that has cockroaches in it. You know? Well, you don't know if it's got. Hopefully, it doesn't have cockroaches.
Have you ever found one in there?
No, but I thought it was a nickname, the roach
It is.
coach.
It's
a roach coach.
Oh, it's a roach coach.
Now
All
it's
right.
it's unfair for people that run a tight ship.
Yeah.
But but anyway, with the food court, went round there, and it was almost like a nightclub. It wasn't like a nightclub, but it was pumping. Like it had a
Yeah.
really good vibe, and I definitely would go there just to go to that food court.
Very specific, like niche foods.
Yeah.
for
Really
everything.
good.
So like each store has like 3 items.
Yeah.
So they better be damn good at those 3
Yeah,
items.
it's really good.
And you can
But
go back over and over. it
do you know
looks
what
like.
amazed me with that food court? Because I was looking, because I like real estate. I always look at businesses,
Sure.
restaurants, and I'm always one to critique a restaurant or a server or a manager if something's going tits up. But I do it in a nice way. I'm not like an asshole.
Yeah.
But not
Come
really.
on.
It's better to let them know. Let 'em know.
So, and then at the food court at World Resorts, they don't have hardly any backspace. So they make their food like in a really small space.
Like a really condensed area.
Yeah, and there's no like back area that you
Yeah.
can see. So it's really impressive how they pulled that. I highly and I'm not getting paid. And I haven't tasted it yet. I just walked past it.
Yeah.
But the food court in World Resorts looks amazing.
Was it amazing?
Yeah.
So going back to you, Preston, I was just saying, the food part of it. You guys are doing what type of restaurants do you buy?
So we want to. Well, there's the franchise side, and then there's more of the, I would call like elevated concepts and passion projects.
Sure.
That are much more of like designed from the ground up. A lot of thought goes into those. We've got the easy stuff. I'd like to say is the coffee bean and tea leaves. They hand you a book. Jamba Juice. They hand you a booklet. Here's how you run that.
Yeah.
And it's much different than the.
Well, that's more like a franchise, right?
Yeah, exactly.
Is that
So we
right?
have, so we have that side as well, which is very simple. Like we talked about earlier, drive-throughs. Like I will, move heaven and earth to have a drive-through literally almost.
I know of a
anywhere.
tiny
So-
one that's vacant.
All right,
West Charleston, across from the community college.
Now we're talking.
It used to be a Subway. It's right next to Farm Basket. The
Yeah,
last
yeah.
standing Farm Basket in
It's
town.
funny you mentioned that one. So we'll talk offline. I don't need any more competition.
Don't talk about it anymore.
Yeah.
He wants to pounce on it.
Yeah, please.
So-
He's gonna bounce on it.
We can edit this out in post, right? And make sure that doesn't get in
So
there.
I heard a statistic. So a friend of mine, he's like horrendously successful. And
Yeah.
He does he's going into making franchises. He's made a ton, like an ungodly amount of money.
Yeah.
And then he wants something to do. So he told me that in America, I think he said 69% of all businesses or 65 are franchises.
Do
you think that-
I couldn't speak to that?
Okay,
I
but
don't know, but
but
that
like
I
these
wouldn't be surprised.
These franchise.
I heard
sorry.
that 65% of stats are
Yeah,
made up. So
yeah,
I'm not sure-
maybe.
I'm not
But
sure what to
like,
believe.
say these Jamba juices, or like a tropical smoothie, what
We can
percent?
just talk about Jamba Juice.
Jamba juice then. Okay. What percentage of does-
Tropical's my old boss. So.
oh, okay. What percentage of what margin does an operator make on like a Jamba juice? Approximately.
It kind of depends, right? So I can't get into too
Yeah,
much
yeah,
on
like
details
10%?
of the store numbers. No, you need to be running higher than that. A typical restaurant, McDonald's is going to be like a penny business. My buddy
Yeah.
his family has several of them, and they're counting how many napkins they're
Yeah.
wasting, and how many sauces they're wasting, because every one of those is literally like eats
That's
into their
their
profit,
profit.
Yeah.
more so than anything else.
Yeah.
I mean, yeah, they have the
They shoot
marquee
for
and
what,
everything like that.
15% though in those places?
I think that's probably, if you can get 15% out of one of those, that's probably doing very strong. And again, there's certain like critical mass, like you get to a certain amount of volume. Everything above that is just more because your workers are super efficient and everything like that. So you can take home more money. So we have some super high performing drive-through in California, and because it does so well, I mean, we could afford to pay 4 times the rent that we pay there.
Right.
But hopefully the landlord's not listening to this.
Right.
But but that same store, it could, down the street, if it's not, if it's in line, it could be a fraction of that and could not be profitable just because of, you think you're in a mall that's, oh yeah, I got good foot traffic or whatever, but the store setup doesn't make sense. It just could fall flat.
I don't see how those little places make it inside those casinos with this super high
foot
rents.
traffic.
Foot
Yeah,
traffic.
Is that
and a
it,
lot
huh?
of those are profit sharing too. So they want you to have a great success.
That's a rev share on the
Yeah.
rent.
Yeah, so and they want you to make $2 million so they can take 20% of that or whatever it is. So
But it's a tough business. Like I remember this was going back a bit. There was a it was called the Rainbow Grill or Rainbow Bar and Grill
Yeah.
opposite the
On
Hard
Paradise,
Rock,
yeah.
right? So that was a really
RIP.
successful place in
in
California, and it was amazing. They spent a ton of money, and then I was young then, and I would I don't drink anymore, but I would go out and have some drinks and whatnot.
Yeah.
And I knew a couple of the fit girls behind the bar, right?
Yeah.
And they literally would give free drinks, and I just would tip them really well. And then that place, how long did that take for that place to get out of business?
It's been a while.
It's
I
like
did actually
theft.
lease that shopping center a
Oh, you
while
did?
back.
Yeah,
I
yeah.
did not lease that
So it's
specific space,
scary with the staff giving away
Yeah,
drinks and
It all
stuff.
well, that's probably, I don't remember if they had gaming or
Yeah,
something.
they did
but
not.
They did not. Well
No.
then, yeah, that's probably why they went out.
Yeah,
of
they look
business.
the other way when there's gaming involved.
Yeah, well,
Yeah.
you get 2 people in there that throw
Juice the machine.
$1,000.
Yeah.
It doesn't matter about the
Yeah.
bottles of liquor at that point. But yeah, to go back to your question on the profitability, if you're running the tightest ship of an extremely successful restaurant, I mean, you can make upwards of 30%, you'd hope. But even then, I mean, that's you got to know what you're doing. You can't be.
So how many restaurants do you have now?
I believe there's about 44 under the umbrella.
Wow.
So, but and again, that's not just one franchise of,
Right.
of just Jamba Juice. It's the variety. So,
Mm.
and there's I think it's like 9 of them or so in California as well. So a different market.
So are you out recruiting investors to invest with you guys, or is it?
No. We
no?
have that side. Just looking for new opportunities. Just to we're trying to add some more drive-throughs to our portfolios because
Right.
we don't have that. I mean, Starbucks has been doing that for years, and
Yeah.
they'll just go dark if they can find a space next door, and they'll just pay for another 3 years or whatever it is
To get the drive-through.
to have because
Because that's some money.
in a drive-through you're going to probably go from. I mean, you should almost double your sales.
Yeah.
Yeah.
Almost double.
Interesting.
It just depends. But you got to hope that you can provide the same experience.
Look
you know.
what Chick-fil-A did with their drive-through up at
Those are
Rainbow.
insane.
Yeah.
Every single one of them.
I mean, not Rainbow, Charleston and
whichever
Fort
one,
Apache.
they're all insane.
Well, they have like multiple lanes and
Oh
Yeah,
yeah, it's
yeah.
pretty slick.
people out front. And
Yeah, and then they just did the one next to the Palms or whatever that's going to be called,
Mm.
and that's its own monstrosity. Yeah, those guys are doing upwards of $7 million.
Wow.
That must be
So,
the future of
I
drive-through
tell
right
you,
there.
one
Yeah.
thing I think is a scam
Is
is Shake Shack. That's a scam.
what is Shake? Explain what
because
Shake Shack
Shake
is.
Shack.
They're famous in the southeast.
Yeah, but
I
they.
thought it was
So
an
my
East Coast.
neighbor,
I thought it was like more northeast.
my
but,
neighbor has he's got the franchise for Vegas, and he has an investor, and
Yeah.
I went over there, and it's just so blooming expensive, and the fries and burgers are so small that you go in there, and normally I'm an evangelist for In-N-Out. Like you can't go wrong with In-N-Out.
Amen.
But Shake Shack, you go to Shake Shack, you go to In-N-Out, you'll spend like $22 and you're fed. But if you go to Shake Shack, you're spending at least $50 for the same stuff, and it's smaller.
So is that because I'm an In-N-Out
that's why I
person.
think it's a scam. It's
I like
not really a
In-N-Out.
scam.
You guys like In-N-Out burger?
Sure, absolutely. Yeah.
I mean, who doesn't, right? I mean, I think there's some that don't like it, but I mean,
They're wrong.
I think Shake Shack probably would describe themselves as a different
They're the
experience.
connoisseur.
You want mushrooms and
Yeah,
oh, you want something very like a la
special
carte almost.
sauces.
Yeah, In-N-Out does three
Yeah.
things.
Burgers,
that's all
a la
they
carte.
do, Everybody wants to be
Yeah.
In-N-Out and just simplify and simplify.
So
because
their
they can run
burgers
the
must be a
numbers.
lot more expensive.
I can't speak to
Dunno.
product costs. I'm assuming that the product cost for something like Shake Shack would be hard, more expensive
Maybe.
to keep. That would make more sense.
Who knows? But yeah.
If you want a big old nasty mushroom Swiss burger, you can't get that at In-N-Out.
No, no.
Okay, I know we're getting way off track now, but
you're-
what's the best
Yeah.
burger in Las Vegas?
The best burger.
The best burger.
Fun fact: Vegas was the first town to have both an In-N-Out and a Shake Shack.
Oh,
'Cause they're
really?
both from opposite sides of the country, I
Oh.
believe. I'm sure there's
Ah.
plenty of other cities like
Interesting.
that now, but Vegas has that going for us.
Well,
We
I think
did.
it
We did.
depends. The burgers, is it a burger at a restaurant or is it a fast food chain, right?
Well, I
And
think
that's-
In-N-Out, there's no beating In-N-Out. For
No,
fast
I
food
don't
burger.
think so either. I mean, but I hear people say all the time, like they got that Whataburger. They say that rivals it
Oh,
back in
really?
down in like, I think they came
Where's
out
that?
of Texas. I think they were out in
Texas.
Texas and
Texas.
that area, but that's what I hear. But I
As long as
I
nobody
don't see
says,
it.
as long as nobody says White Castle, that's fine with me.
Fat
Yeah.
burger is pretty good.
you
Fat,
like Fat Burger?
Burger is a good burger.
I don't know, man. I like it. It's just not. It's good.
It is.
It's
nice.
good.
Do you
but
know what? I love the name though. It's like fat.
I think that's.
Fucking, excuse me. Let's get Fat Burger. I want the fat one, please.
You just like the name
Call it
Fat.
what it is.
fat,
Just
not
what
with
it
a
is.
not with a
PhD?
PhD. No, fat. 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 Shut your mouth. Eat your burger.
Yeah, right.
I wish I had a strip center with 2 different drive-throughs at either end.
Yeah.
You know,
Do you-
that's
do-
what I
do
want to
you-
do when I grow up.
Do you buy those types of places like a Fat Burger, like you said?
Well, just every opportunity is different. We
Yeah.
like partnering with culinary experts. You know,
I see.
And then we'll.
It's
we
just
have
all
a lot
about
of back
profit.
ends. Well, at the end of
Obviously,
the day, everything
right.
is right.
Yeah.
But no, you want to give the best product you can, and there's no way to do everything we do. You know,
Mm-hmm.
have such a variety without empowering these chefs to really take hold of the product and
Yeah.
spearhead
Yeah.
that direction of that concept.
Do you have a say so in that?
I have no.
You have
I'm
none.
Just a
You're
deal
just
junkie, man.
You're
I'm
just the numbers
I-
person.
Yeah,
right?
I'm like, hey, this is going to be a good spot. We should
Right.
probably check into this, or hey, I think we'll get a good deal over here, or hey, we need to renegotiate this.
Wow.
We're over.
Is it based on
we're-
traffic count
we're overrated.
mostly, or foot
Totally
traffic?
depends. Depends. Like we have several concepts at Tivoli Village now.
Tivoli Village, huh?
So yeah, go check out El Solito Posto and Ada's, please. They're fantastic.
Yeah.
And that's more of like when you're there, you just feel a little different. Like you're
Yeah.
going to be able to get a different experience at that property. But that property's had to,
Yeah,
go through its-
Brio checked out though.
Yeah, but that's where El Solito is now.
Oh,
Yeah.
I haven't been there
Oh,
yet.
I read an
Okay.
article about him.
Yeah.
He got more aggressive. Like they
Who?
the place that took the Brio space. What's his name?
Jeffrey. There's several people
Yeah,
involved.
yeah.
But there's our
So,
restaurant group,
so
yeah.
I read an article about that, and they've like been quite aggressively expanding. Like to,
That's the
it's
goal.
how you reframe anything.
Yes.
Like the COVID was an opportunity for many. Some people like suffered, and if you like pivot on it, you can do better. Like
It's all about being being
flexible.
Opportunistic is
Mobile.
basically what it
Mobile,
is,
yeah.
right?
yeah.
So,
So
I'll check that place out. I live nearby.
Yeah.
Yeah.
I
it's-
tell
it's
you
fantastic.
that like there's another one restaurant. We're talking about restaurants now.
Well, we got running at
Oh, we got-
altitude said Culver's Burger. Never heard of
I
that.
haven't
Not
heard
yet.
that
I
one.
haven't seen that in Arizona
Yeah,
yet. To have
Culver's
one, though.
Burger is great. I've never heard of that one.
So there's a. Have you ever been to Genya?
Genya? No.
Yeah. So
Genya
Genya's
ramen?
good. I
Genya
like
ramen?
Genya.
Yeah.
So they're really busy. There's one opposite the Palms. It's hard to get into, but they're expanding. They put one in Henderson on up Eastern,
Yeah.
where there was a restaurant that was owned by Gia, the lady at the used to be Barbary
Oh, I know
Coast,
where
Dre's.
it is.
Yeah.
Yeah.
What's
Giada.
that girl's name? Giada.
Yeah.
Giada.
So she had her
That's what
own
it is.
small restaurant in Henderson,
Huh.
but that location sucks, and it didn't do
It's
well.
all about location,
But
man.
Genya went in there.
Yeah.
Genya's really good.
Some people just have a product that people will, do whatever they can to
Yeah.
to get
So,
to, and you could have no access to your building, and somehow people will climb over a wall
Sure.
to get to it. Like people are like that with In-N-Out or whatever it is.
Yeah.
So
Yeah, but Genya, that one.
fanatical, like Chick-fil-A. I think it's a chicken sandwich personally, but I'm
Chick-fil-A?
wrong. Apparently, I'm wrong.
Chick-fil-A, you're saying?
Yes, I think it's a regular.
So
But
chicken
it's very
sandwich, but,
godly.
I've
It's
heard-
very Christian.
Right.
I've heard that when you go there,
I'd buy
they'll-
that company, and I would increase profitability by opening it on Sunday. That's what
Yeah,
I would
exactly.
Do. That's my
Yeah, they're not open on Sunday.
who runs that? You don't know.
The God Squad.
The God Squad.
It's a family-run business, and
Yeah.
they have something against being open on Sunday.
Yeah.
But you would think.
Well,
it would be
listen,
the
there's
know
pluses
what?
and
It
minuses to that,
makes
though.
absence, makes the heart grow fonder, right?
Yeah.
So
Maybe.
if
There's
you know,
pluses
you
and
know,
minuses to that, though. What if you do have a family and you want to spend Sunday with your family? You know what I
Yeah,
mean?
that's
I'm
how
just
they
saying.
look at it. They don't
Yeah.
want they don't want their workers to be
No.
at work.
Do you know, I heard that the lady that owns In-N-Out inherited it from her dad.
Huh.
And it's a private company, and I think she must have like a boat ton of money.
Oh,
like,
for sure.
think?
Like it's a private company.
How many in and outs are here in Vegas? I would say what, at least 10 that I know of, right?
I'd have to.
And when I first came here about 20 years ago, I think there was only a few. There wasn't.
No,
it was like there was one-
zero.
Yeah, there was like one or two, and it's like now there's 10, and it's like they're obviously growing.
The first one was on Tropicana, right by the
Yeah.
That
by
was
15.
a monster.
So maybe it
store
was
forever for the
25 years ago.
company.
Yeah.
Yeah, about
Yeah.
25.
I think they should change their logo though.
Why?
Well, they should have a
I think it's
slogan.
old traditional.
I
man.
was
Trying
say,
to cancel In-N-Out
no,
right
no,
now?
no, no, no. I'd say In and Out. What a great relationship is all about.
Let me ask you this:
Ah,
those out, hey, right?
that's the PR.
Right?
move.
They're traditional. Do you think in 25 to 50 years, let's just say, just throw this number out, they're gonna still dress in the same outfits
Yeah,
they
for
dress
sure,
in, right?
for sure,
They're not gonna
100%.
change.
No
I don't
point.
think so.
Yeah, why would they?
Why would they,
point.
right?
Super
So
simple.
let's go and I want to talk a little bit. So
Should we talk about real estate?
Yeah, let's talk about real estate. Let's talk about real estate. So
I promise you, I'm in real estate to some
You
degree.
are.
To some degree.
you are in real estate, yeah, yeah.
To some degree.
Some degree, right?
It has to involve.
So
food
let's
for the most
let's
part.
kind of finish it up with you. So is there, like, if somebody wanted to seek out to work with you or work for you, is that something that you even do or something you don't do?
I'm always looking for like land, right? I'm
Land.
looking for a developer who's going to be building something.
Sure.
Who has an end cap drive-through. Who where's the next shopping center going up? Who's
So
gonna-
we're
who's gonna
looking
be
for
there?
big money right now. You're looking like somebody with big money is watching you saying this might be an
Well,
opportunity.
they need
I need
products.
But land.
They need space.
You need
Yeah.
but you need
So
space to
for,
buy
like,
it,
the
right?
small- for the-
But they're
for
going to
the
sell it
franchise
to you,
stuff.
right?
Yeah, yeah.
Right.
So
Lease it to you normally.
Yeah.
Oh, they lease it
we
to
would
you.
love to own just because we want to have that
Okay.
generational mindset,
Yeah.
and why wouldn't you want to own have your business afford your real estate,
Yeah.
and then you can sell off the business if you want and keep your real estate or whatever it is.
Look, somebody looking to sell is what I was interpreting.
Yeah.
But somebody looking
so
that's trying to
a
get
lot
rid of
it
something.
right now is like
peak-
if you
peak
have
market.
dirt, you're not selling it.
Yeah.
You're just trying to ground lease it. You're going to have somebody else figure out how to build a building on it and
Make it
then
work.
it's-
and
Where's
keep-
that?
And then
Yeah, go ahead. Go ahead.
so yeah, I mean, you're seeing ground lease numbers. It's the rent that a typical drive-through is going to want to replace. Anywhere from for a small spot, it's going to be $80,000 a year to I know of a spot that's going on the market for $150,000 a year that it's probably overpriced. But somebody at the end of the day has got to figure out how to make that business work.
Right.
It doesn't matter what the landlord wants.
So return on
In my
investment
opinion,
still, right?
I mean, I've worked for
Yeah.
guys that I don't care. We need more rent out of this tenant. It's like,
Yeah.
well, they can't afford to pay anymore.
Right.
So it is a symbiotic relationship, and there's a healthy rent threshold for that business. Then yes, there's people that run businesses that they don't make money.
Yeah.
And they shouldn't be in business.
Right.
And that's unfortunate.
Right.
Not everything's a winner. You can't.
Yeah.
You
don't-
can't flog a dead horse.
Sure. I mean, you could try.
Yeah, well, you could, but you're not
could.
going to
It just
go
doesn't
anywhere.
get anywhere. You just get tired.
Yeah.
So you really got to have that understanding with the landlord, and we've been in working through all these working through all the COVID situation, and I totally understand how businesses just stop paying rent.
Right.
Because
So,
what's the
about
point?
that,
like
a friend-
you can't do business. Why would you pay rent?
A friend of mine has done really. His dad was prolific in land in the 80s.
Sure.
Crushed it in Vegas. They have a lot of land and they have a lot of restaurant leases and
Okay.
stuff. And they had some Wendy's. They had a few Wendy's, and then you'd think Wendy's would be good, and they had the drive-through, and they got PPP. But he got a letter from corporate saying we're not paying our rent anymore.
Right.
And then they just did that to everybody.
Yeah,
because
the
everyone.
Cheesecake Factory did the same thing.
Did they do the
Yeah,
same
and,
thing?
And what are you going to do is, as a landlord,
You
when you've
can't
got
kick
this-
'em
when
out.
You've got this extremely
It's the
specific
Cheesecake
space. It's going to
Factory.
be a cheese. What are you going to do? You're going to go in there and turn it into the.
PF Chang's?
yeah,
It's not
it's-
going to
it's-
happen. Because you probably already have PF Chang's as a client as well.
Yeah, they all go to the same thing. They're
Yeah.
all, it's like
It's a
the same
formula.
tenants go.
It's a formula.
Exactly. That client would, is going to go there too. But it's a complete gut. Like the
Yeah.
Miller's Ale House. That are sitting there. Like they don't like at Town Square. They want somebody to come in there and change it from what it looks like now. The Miller's
Yeah.
Ale House is
But
a very specific look.
very specific, but
So-
good spot, but
Yeah.
needs,
And that was that was an operational thing from what I understand, and they had their one lease kind of expire at Town Square, and then they just decided to operationally shut
They
the
let
other
the other
store
one
on
in
Eastern.
Henderson. Yeah.
Yeah, but and you walk in there, I mean, it's turnkey, like ready to go.
Yeah.
You know, bring in your food and your employees, and
Off you go.
you're good to go. And that's very hard to find. But you know, you're talking what 400,000 a year in rent by the time you're.
You'd think there would be an entrepreneur out there that was smart enough just to change the name slightly, like from Miller to like Killer, put a K on the front,
Yeah.
and then just still
I
serve
think
beer
this is
and
you.
food.
Do you want to lease some space?
Killer,
about-
yeah,
Or
Killer
how about
Ale
the
House.
Cheesecake Fabricators?
Yeah.
That's a good one.
Yeah, move in. Pay half the
Anyway.
rent they were paying.
Yeah.
Yeah,
So,
exactly.
so it's good that the landlords kind of like they got their, in my opinion, they got nervous.
Yeah.
They're like, oh my God, what am I gonna do here? So it was much different than the last crash where, you know, people would pay their mortgages and stuff, and then they'd still get kicked out. So
Yeah.
tenants are much different these days. They're a little bit smarter. They're going, wait a minute, you got to work with me, because like if you don't work, if I look around and nobody else is paying you, you know, you're gonna give this property back to the bank, and the bank's like, wait a minute, we don't really want to be real estate people either, so like let's work with you. So it became like a much more of a, you know, let's work together, let's figure this out as kind of a community, which was nice to see. I mean, yeah, it's unfortunate people lost businesses and, you know, their lives and everything as well.
Such
but
is life.
yeah, it's just
You know?
it's just constantly changing and flowing and
Okay, we're going to end this segment.
developing.
I want to talk with Larry over here. So we got a question on this board here that says, during the home buying process, and maybe Matt can jump in on this, when should the home inspection be completed? Before or after the appraisal? Larry, you got the stage,
Larry
buddy.
first.
You know, sometimes people make an appointment with us and they say, we want to wait until after our appraisal.
Uh-huh.
I don't like that because
Bad plan.
it's crunching their due diligence time.
Yeah.
Yeah.
And with due diligence windows getting shrunk right now, not a good idea. Get the home inspection done, get it back as fast as possible. 'Cause
Right.
sometimes you need a day or 2 or 3 to book the home inspection. You know, we're full.
So
Everyone's so slammed.
So good. That's okay. So to caveat what Larry said, right? Do the inspection right away because it's done, and then you know what you're dealing with.
Right.
I even write in the offers now because I need to make my offers look more sexy than the other offers. And what is more sexy? More sexy is we will do the inspection within 24 hours. We'll order it within 24 hours. We will order the appraisal within 24 hours. And then I shorten the diligence period from 10 days to 7 days because it looks a bit better than 10 days. But then when we get the inspection report back, I don't hold off on the inspection, but I say to the listing agent, we're gonna address everything in one go once the appraisal's back in, because then if there's some stuff in the repair list for the inspection,
For sure, there's going to be stuff, right?
yeah, but you can make a big deal out of it or not.
Right.
But even if you're not going to make a big deal out of it, if you have to do some, like if you have to jerry rig the deal to like make it work, right? Get the duct tape out, fucking all that.
We're
shit.
not going to ask you to fix the water
Yeah,
heater.
but what we'll do is we'll make a long list of we're being really nice to you. All this shit is wrong with the house, and it may be wrong or not, or we just be making a big deal out of
Right.
it. But then you use the inspection to massage the deal through. But I would never delay the home inspection, because if there's something seriously wrong with the house that was never picked up, then you just wasted $550 on a appraisal.
Right. So a lot of customers come back to us a few days later with another inspection, and we just assume like, well, they didn't like that first house.
Right.
Yeah.
So we don't really have a horse in the race. We just write it
You
up
just
the way
wanna
we
do the
see it. And we
inspections.
go, you know what? You got some structural damage here. You got roof tiles broken. You got a leaky water heater. They might want to just move on to the next
But I
property.
tell you what, one thing.
You guys put in
is that-
multiple offers all the
Yeah,
time,
but
right?
one thing I never do that, right, is because there's a problem if you're ordering multiple home inspections. There's a problem with the buyer's agent or the buyer, because you shouldn't be ordering more than one home inspection if you're doing it properly, unless something's like really messed up with the house that was hidden. So I would say that if someone is spending multiple times anywhere from $350 to like $500 or $600 for a home inspection, then they're not doing it right, in my opinion. But who knows? And you're not complaining, obviously, because you're doing another inspection.
Sure. We don't know what their criteria is. Sometimes,
Yeah.
you know, you've run into all kinds of customers. Sometimes a deal killer is finding out that there's scorpions in the property.
Yeah.
Sometimes a deal killer is they're there and there's recess across the street at the elementary school and they can't stand the noise of the children. So so you never know. Sometimes they'll blame the home inspection for the reason that they're not going to do the deal.
Yeah.
But maybe that has nothing to do with it.
Yeah.
It sounds to me, in my book, that's poor show. But like, hey, what are you going to do? Like, you should know where the school is. You should know all this stuff.
Yeah.
You should know before you write the offer, and you should know before you order the inspection.
But have you met most people?
I met all my people, and here's the thing: is like, I have to they come in. And I have to do a checkup from the neck up, and I take the trash out, and then we start with the clean slate. And I'm like, this is the best way to do it, and they understand. Whereas if you, as an agent, if you let your buyers run wild, then it's gonna hurt them and you.
Sure.
You have to it's like I always say, it's like landing a plane. You have to do like the right flight approach and have the right directions, and then you have to land the plane, and then the guy on the tarmac has to park it. Right.
Right.
And so, a lot of the time I sense like I don't work with everybody, because if I detect like craziness or unrealistic expectations, then I'll just tell them that I can't help you because I know what can be done. But like, it is tricky. But people are people.
Sure.
And
you don't control the other side of the transaction, so you don't know what's going on over there.
But I do, with my home inspections, I always tell them to leave the home inspector alone and just show up at the end if they're in town, just to have a quick talk through. Because, and then the other thing with home inspections is that there's good home inspectors and bad home inspectors. Some home inspectors will talk too much about small things that aren't really relevant and aren't going to impact the transaction. And then if they get in a buyer's ear, and then the buyer gets an unrealistic expectation that this like slight cracking on something is like bad, and then it blows the deal up, and then unfortunately that buyer remains homeless, when otherwise, if something does come up in the home inspection report, that's what we do the diligence for. If you do the home inspection within 24 hours, you've still got 10 days to get bids on stuff if there's small stuff that needs to be sorted out.
Right. So if you're pointing out a settlement crack in the ceiling, you have to
Totally
give it
normal.
the appropriate. 50%
Level,
of the houses have it.
Yeah.
So you can't make a big deal about that.
It's not a crack house.
It's not, and it's not structurally significant in most of the cases.
Yeah.
Right. So same thing with floor tiles. Same thing with roof tiles. Like, you could come off the ladder, and they say, "Oh, how was the roof?" And then you go,
It's pretty decent.
Right.
One or two cracks.
You roll your eyes and you go, "Oh yeah, there's a couple of really
That's normal.
cracked tiles," and you can make a big deal about it. And now suddenly you can see the life draining out of the buyers, and the buyer's agent is like,
we can sort that out. Yeah.
But you could get off the ladder and you could say, and they say, "How's the roof?" And you go, "Wow, your roof is like 99.9% perfect.
Yeah.
There was one or two cracked tiles. Every tile roof we've ever been on has one or two cracked tiles. You should probably get those serviced." I said, "But man, this is really good shape for a 23-year-old roof. I didn't see any ceiling stains when I was in the attic."
That's the key thing.
Some glass is half full, right?
Yeah,
we need transactions.
It's like you gotta break some eggs to make an omelet. It's like you may have a couple cracked tiles to do a deal and get a house done for a resale. It's the same thing but different.
Yeah, I just had a roofer at my house.
Yeah.
I don't have any roof leaks, but I had a tune-up. I'm like, "Hey, man, I probably got 3 or 4 tiles that need to be fixed up." Well, he found a couple more, and then he caulked around a couple of things.
And you're good to go.
That's it.
Yeah.
It's every house in Vegas is this way.
Yeah. I think, too, you look at new homes, and I want to talk about this, and this will be our last question. But when you look at new homes and you're out there inspecting new homes, you do home inspections, and, one of the things that I want to always ask is, are they building with the same materials? Obviously, you would think that they would advance, but is it the same materials, or is it better materials in today's world with these new homes?
Well, I mean, you got wood. It's the same.
It's the same.
Pretty much. You got granite. We've got a lot of high-tech stuff out now.
Okay.
Today's homes are so much safer than they used to be.
Okay.
There are fire safety issues, electrically safe. I mean, they're really impressive.
Yeah.
So I think that the new homes are great. They're so expensive. It's crazy. I mean, you need $500,000 basically to go out looking for a new home.
Yeah.
So other than that, the crews that build them, they float around from Pulte to Toll Brothers to Richmond American.
Yeah.
You know, they're all the same people.
Yeah.
So you got to find yourself a good superintendent who's paying attention to your project.
What is some of the problems, most of the problems you see on new homes when you're inspecting them? What normally comes up? Because the builder's going to protect the builder. We know this. Like, they're not going to come out and be like, well, this wasn't done right, or this wasn't painted right, or this wasn't, the foundation's not there. What do you see that traditionally?
They're good at making sure the texture is okay and all the cosmetic stuff, but they have to beta test the house. Your customers, you don't want your customers to be the beta test, right?
Yeah.
To be the first one to run a dishwasher and find out it leaks. To be the first one to open and close certain drawers and they interfere with each other. Even switching from AC to heat, sometimes it won't flip over appropriately.
Right.
We find these things all the time. Or I did a $1 million house up in Summerlin, and it was hot on one side, or cold on one side and cold on the other side, where the hot water's supposed to be.
Yeah.
So and this is at the kitchen sink, and these guys were ready to close the deal like a few days later.
Yeah.
So they had some work to do.
So explain let's explain what a master home inspector is versus a regular home inspector.
So 99% of the home inspectors here in town are residential inspectors, and that's what you call to get your house done. And if you have something big or special and you need something bigger than 10,000 square feet, you can call a general, which is a higher level inspector, or a master. And so they've gone through a certain set of criteria that enables them. They've been approved by the state to do basically unlimited size. Like I've done the Harley Davidson Cafe on Las Vegas Boulevard.
Oh, wow. Okay.
I just did 72,000 square feet of commercial office
How much do you
space.
charge for an inspection of the Harley Davidson place?
It's thousands.
Yeah, because that's a big building.
It was huge. 2 commercial kitchens,
Oh, the kitchen, the Harley Davidson restaurant. Oh, I was thinking about where they sell the Harley Davidsons, the cafe.
Oh, those places are huge too. But we've done buildings that big.
Oh, wow.
Yeah, we've done. I mean, some of our
What's
inspections
happening
are
to that Harley
many
Davidson
thousands.
place now?
It's a
Is it still
Mexican
open?
restaurant right now.
It's a Mexican restaurant. Yeah.
Yeah, I walked by it the other day and I was like, oh my God, this is the place I inspected. I actually made a video from the roof of that place.
Oh, did you really?
Yeah.
Wow. Well, you guys have anything else? We can end this show on a good note.
I have one thing. So you're like a master inspector, and I like debates. I'm like a debater.
But of course, I can see this coming.
Could I consider myself a master debater?
I think most people do consider that you are.
Yeah. I think you are, man. I think you debate very well. Yeah. I think you could have been a lawyer too, actually.
He's a cunning linguist as well.
I'm a cunning linguist.
Right. Get everybody on your side. That's what you're good at.
Exactly. No, I don't have any questions.
Anybody else? You guys have anything else?
Good.
Well, guys, hopefully you guys learned a lot of information. Thank you so much for the comments. Again, we'll be back here on Tuesday, and I'm sure Matt will be back here. If you guys have any additional questions, please comment in the comment section. I'll have all these, everybody's information will be in the comment section. So if you guys want to get a hold of them. All right.
Awesome. Thank you very much.
Anything else, guys? That's it.
Thanks, guys.
You guys have a good
Happy 4th of
Happy
July.
4th of
Happy
July.
4th of July, everybody.
God bless America.
We'll see you Tuesday. Thank you for watching an episode of the French Workbench podcast. If you want to tune into past episodes, please subscribe to my channel now. Also, if you want to look at our audio-only options, we do have iTunes and SoundCloud.